Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the first bullish scenario where we have an expanding leading diagonal in wave 1, followed by a WXY double zigzag correction to the downside in a wave 2, after which we want to see continuation to the upside in a wave 3. The common target area for a wave 2 is the blue zone here. Officially it's the 05 to the 786, but as the golden pocket has been hit, I removed the 05, as you can see, acting nicely as support. The common target area for a wave Y is the 1 to the 1.236 trend-based fib extension taken from the high to the low of W to the high of wave X for a double zigzag ABCW correction in X and another ABC to the downside in a wave Y. As mentioned, we now then want to see continuation to the upside. In the second bullish scenario, we expect a longer sideways corrective structure in this wave 2. Again, we have an expanding leading diagonal in wave 1, but now we're looking for a wave A, B, and a wave C towards the downside. What is not ideal, however, is that this wave A ends on the highest amount of volume. Wave A should be an impulsive structure, as we are then looking for a 535 zigzag to the downside. And in wave 5, we either count a 1, 2, 3, 4, 5 ending over here or ending over here. However, both of these endings have the highest amount of volume in this move towards the downside, and that is not really what we like to see in an impulse, as preferably in a 5-wave impulsive structure. Wave 3 has the highest amount of volume and wave 5 makes a new low on lower volume, but that is not the case, as you can see over here. However, for a wave B, the common target area is the 382 to the 886, so we do have to pay attention on what price is going to do in this area. We just hit the 382, as you can see, acting as a little bit of resistance, but eventually in this scenario, we like to see a wave C towards the downside, hitting the target area for a wave 2, which then is the 786 to the golden pocket area, as we don't like to see the 886 hit, because the 886 is a very rare target for a wave 2. If we then zoom out, go to the 4-hour time frame, then one of the bearish scenarios here is a flat structure, 3-wave move in A, 3-wave move in a B, and then we look for a wave C towards the downside. It is a 3-3-5. The most common target for a flat is the 1.236 to the 1.38, 76.9k to 78.8k. This is an expanding flat wave B target. The target that you see over here is the target for a regular flat, and a regular flat is less common than an expanding flat, which is the reason why I made this target orange. So naturally, from a probabilities perspective, one would expect price to move towards the upside, as an expanding flat is way more common than a regular flat. After the high over here, if this would be the high of a wave B, we want to see a wave C to the downside, which means we want to count an impulse to the downside in a wave 1, 2, and then eventually continuation to the downside. But as just mentioned with the wave A, the impulse does end on the highest amount of volume on the lower time frames, which is not ideal, because preferably the highest volume is in a wave 3 and not in a wave 5 to end an impulse, lowering the probabilities of this actually being the high. The final scenario is a WXY, also a bearish scenario, after which we do expect continuation to the upside, by the way. Same with the flat. After a C, you expect continuation to the upside to continue the trend. In this scenario, we have a sideways double combo, zigzag in W, X already finished, complex structure, and then a flat in wave Y. Now this wave Y is currently twice as long as wave W, because the fib times are taken from the high to the low of W and then put on the high of wave X to compare W with wave Y. Now commonly wave Y is finishing between the 0.618 and the 1.618 fib time, but now we have already passed the 2 fib time, so the longer it goes, the lower the probabilities for this particular scenario. Also in this scenario, we are then looking for a flat structure in this wave Y. We are looking for an A, B, C, a 3, 3, and then a 5-wave move to the downside. The common target again for this wave B is above price. We didn't reach this area for an expanding flat, as an expanding flat is by far most common compared to a regular flat structure. The regular flat target is between the 1 and the 105, and that is the one that we've hit. However, naturally, because an expanding flat is a lot more common, one would expect price to move towards the upside instead of the downside. If we are looking for a wave C to the downside, however, we have to look for an impulse again in a wave 1, 2, and then continuation to the downside in a wave 3. And as explained previously in the ABC for a bullish scenario and the bigger flat scenario for a bigger impulse to the downside, currently if this is counted as an impulse, then the end of the impulse carries the highest amount of volume, which is not ideal, as usually we want a wave 3 to have the highest amount of volume and not a wave 5. Ending a structure on the highest amount of volume is more common for a wave Y or a wave C to end a corrective structure, after which we expect then a rotation. However, if we do look at the bearish scenario, then we have to count a wave 1, 2, and eventually a wave 3 to the downside, where the common target for your wave 2 is between the 0.5 and the 786 Fibonacci, which is between 70.1k and 71.6k. The 382 is a less common target for a wave 2, and the 886 is a very rare target, so in this area we have to pay attention to what price is doing. Now if I look at the resistance area above price, then the resistance area I have here is actually between the 786 and the 886, so that is quite high, sitting between 71.6k and 72k. We currently found support on the support area here, 67.8k to 68k, and the next support area would be much lower. If we then zoom out once again and go to the 4-hour time frame, then we have a look at this range, rejecting at the value area high, finding support at the point of control, which is very nice to see, typical range trading stuff. And now we observe what price does. Losing the point of control does increase probabilities to move to the value area low. We also hit the 886, taken from the high to the low of this range, which increases the probabilities to take this high sooner or later. On higher time frames, probabilities are so much higher for price to take these highs eventually, sooner or later, expecting a continuation of the trend, and the 886 also confirms this. If we would be looking for much lower prices on higher time frames, you actually want to start this move with an impulse, a 5-wave structure. Probabilities are much better for a 3-wave structure here. But also, if we would be looking for a wave 1, 2, and then a wave 3, the 886 is a rare target for a wave 2, common for a wave B or a wave X, increasing the probabilities that any move coming off the 886 is a corrective structure in a wave C or a wave Y, which in turn increases the probabilities to sooner or later take these highs. If we then finally look at the CVD divergences, then you can see that with the drop that we had over here, price created bullish CVD divergences. A higher low in price, a lower low on the CVD, and the target of this divergence is the high over here at about 73k. If we then look at the probabilities of the different scenarios, then I wrote over here the WXY. What is lowering the probabilities for the WXY scenario is that a common flat target, the blue zone over here, that one is not hit. Also, if we already look for an impulse towards the downside, then the impulse has ended on the highest amount of volume, which is not preferred, and we also have the bullish CVD divergences over here. What is lowering probabilities for a flat structure is that also here the common target area for a wave B is above price, right? We didn't reach the common target area. We reached the target area for a regular flat, which is a less common flat pattern. So naturally, probabilities would be higher to move towards the common target area. And also, again, we have the bullish CVD divergences. If we then look at the top 3 at the moment, then currently the highest probability would be for price to take these highs over here in a bullish scenario, or 1, 2, and eventually a wave 3, or a longer 2 and then a 3 towards the upside. And on a close second, we are looking for the flat scenario. If price then takes these highs, we have to pay close attention to how price reacts in this area, observe a potential range, and if we see strong weakness, we could be looking for a wave C, and if we don't, we can look for continuation to the upside. On the third spot, we have the WXY scenario, where we are looking for already a wave C to the downside to at least take the low of wave A over here as a running flat in an A, B, and then a wave C. Not taking the low of A is very rare. Now this therefore leads to taking the high at 74k before then potentially at a later stage take the low over here at 60k, but that's only possible in that flat scenario then in the A, B, and eventually a wave C. So currently from a probability standpoint, whatever is happening over here, probabilities are higher to take this high here before taking this low potentially at a later stage. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.